What is up, everybody? It is Friday, May 30th. Today, we actually had a really good day in the market. So far this week, price action has felt a little better. It's felt a little more normal, honestly. So today, I actually came in with a bearish bias. I was looking at the fact that we did inverse this 4-hour fair value gap right there. And then overnight, we were kind of just hovering around in this area. I noticed that we didn't have a very strong push out of this level of liquidity that we had right here. As you can see, price created a 4-hour FEG right here, another bearish 4-hour FEG, and we were not even trying to reach up into those areas. So overall, that kind of made me wonder, why is price not moving higher? If it did want to go higher, it would just shoot right through that 4-hour FEG. But the fact that it was stalling here, it made me think that we were going to head down to this level right here at 142 that I had marked out. So here on the 1-hour chart as well, as you can see, price was just accumulating a lot in this area. We swept liquidity, but there's no strong reaction out of it. So when it does that, don't just go based off of a liquidity sweep. You need to see that there is a reaction that comes out of that level. And two of the biggest things that people usually look for is like a change in state of delivery or a market structure shift. I personally like to look to see if we're going to change any kind of order flow. If there are bearish fair value gaps leading into the liquidity sweep, if we inverse those, because that gives me confidence that we're actually moving out of that. So I usually look for the order flow to change and then to see some kind of market structure shift. And those are usually the two good signs for me to know that we are actually going to end up sweeping this level of liquidity. So because we didn't have that, you can see, right? We have this bearish 4-hour FEG. We came down to it, created it, and we didn't even push back into it. So that just shows bearishness to me. Here on the 15-minute time frame, in the morning, we came down, but look, again, what did I say? Liquidity sweep? But do we have a change in state of delivery? No. If you use that, no. Did we create a bullish fair value gap moving up out of here? No. Did we create an inverse fair value gap? No, we didn't. We have none of those three things. So should you have been bullish? Absolutely not. There was no reason to be bullish at that point. There was no market structure shift either. I know that many people tried to long this, and there were some good long setups, potentially to this high right here at 930, but the real move was the move down. And as you can see, this kind of price action right here, people tend to get stuck if they're on the 1-minute time frame. They'll say that price action is bad, that it's choppy, that it's not making sense. But it's not that it's not making sense, is that you're not looking at the higher time frame. You're not looking to see how price is reacting. That's the key thing here. So because of that, I waited for after 10 o'clock like I usually do. I was bearish. I wanted to see a bearish setup form within that first macro. And as you can see, we have no bearish FEG created whatsoever. Or bearish IFEG, an IFEG. We had bullish IFEGs, and yes, to the upside. And I was watching this to this level right here at 930. That was just a 1-to-1. Very low risk to reward. I didn't like it one bit. And then coming into the New York AM3 session, what was I looking for? Some kind of a bearish IFEG getting created. And well, did we end up creating one? I think we did. Yeah, right here. We got this bearish IFEG right there. Now, did I take that? No. And the reason why I didn't take it was because we had a 5-minute FEG below that right there. As you can see, I marked that out. We had a 5-minute FEG, and then we also had a 15-minute FEG right here. Let me mark that one out so we can see that on the chart. So with these two PD arrays right there, I did not feel comfortable taking a short because the order flow on the 15-minute chart and on the 5-minute chart was still bullish. Granted, we didn't get a market structure shift of any kind, but still, I don't want to take a trade that goes against what I'm seeing on the chart. So I wanted to wait again patiently for a super confident trade. And that was, I wanted to see that 15-minute get inverted and that 5-minute to also get inverted, which we did, right? We see that inversion happen leading up into the New York lunch macro. And you see here, we have a bullish and another bullish fair value gap. I got in at the tap or the creation of this 1 minute inversion. We also had another 1 minute bullish fair value gap right here. And look at what price does when it comes back up into that inversion fair value gap right there. It comes up, taps it, and rejects. What else do we have? We have a bearish fair value gap right here as well. So overall, what are we seeing? We have bearish order flow on the 1 minute chart. We have bearish order flow on the 5 minute chart. We have bearish order flow on the 15 minute chart. We have bearish order flow on the 1 hour, on the 4 hour. Shorts were the move. And when we have all of these time frames aligning like that, well, look what happens. We get a massive dump. Super fast, super clean, right into our point of interest, that 21,142. And that was because I waited. I waited for the right setup. I took this trade. I closed it out right here, right at the 10 o'clock open, because I didn't like how it was kind of stalling in that area, and I had to get going. So I only was able to capitalize on like a 1 to 2 pretty much, or really it was like a 1 to 1.5, I think, because I took partials. So the total gain was about a 1 to 1.5, which was fine for me because I still walked out green. It doesn't matter about catching the whole move to me. Ideally, I would have wanted a runner to that level, but unfortunately I was not able to get that. And that's okay, because I know that the market is here every day. There are setups that are going to form every single day, and I shouldn't be holding on to the fact that I need to catch everything today. Today is the last day of the market. No, that's not true. All right. So that is always important to remember. So now, you know, once price hit that level of liquidity, that was the objective for today. No point in watching anything else. But when we do hit those levels like that, we could expect a retracement of some kind, because it is a higher time frame level of liquidity. And of course, we look for the setup in the New York PM session macro, a bearish fair value gap turning into a bullish inversion fair value gap. We also have this structure here. We have a low, we have a high, we have a lower low, higher high, and now we are expecting a higher low, which would then fit into our narrative to reject out of this area or bounce out of this area to then continue moving on higher. Here you caught a very quick and easy 1 to 2 risk to reward, and then coming up into this area here, not the best, because it seemed like this was the objective right here, which we did catch. And then, you know, it just kind of messed around for a little bit after, but I mean, you could have scalped something. But like I said, at that point, no point in trading, especially on a Friday. So I hope you guys have found my trade recaps this week very informative. I'm going to try to keep posting these often, because I know people have enjoyed it. I've been doing it mostly for my mentees. I am starting a new bootcamp session next week. I have a couple of new students. If that is you that you would like to join, just feel free to hit the WAP link down below in the description of the video. Hopefully you guys ended up green. If you guys have any questions, please feel free to reach out to me. Otherwise, enjoy your weekend, and let's get some rest and relaxation in, and then we'll be back at it next week to kill these markets again. Peace.